afternoon, everyone, and welcome to Stock Market Today. You have Alyssa Korb and Ed Carson here. We're going to break down the action for the major indexes. A little bit of a fade into the close, but off of session lows for the day. We'll get into that. And Ed, there are still some interesting looking stocks underneath the surface, and we're also going to have a lesson from a name in the chip space. What do you have for us?
Yeah, we're going to take a look at DXC Technology and US Steel, a couple of breakouts today, and AMD continues to slump.
All right. Well, let's get to the major indexes. First, we have the Nasdaq, which cut a loss of 1% to 0.1% by the end of the day here, Ed. We had the S&P 500 and Dow closing down about 0.3% apiece. And the Russell 2000, it looks like a day of some nice outperformance there, but we've been talking about how small caps have been struggling. But first, let's look at the Nasdaq here, Ed, closing above that 13,000 mark.
Yeah, so that's nice. It held above that. It erased a 1% gain, briefly turned positive before just edging lower. So that's all fine. It's definitely, it's nice that we, didn't have another significant loss. But really, from the high or the low, you can sort of see it wouldn't have really changed anything. We're above very short-term lows. We're definitely above the March lows. On the other side, we're below the 10-day line, below the 21-day line, below the 50-day line. So technically, this still just looks weak. I mean, it hasn't really changed anything fundamentally. I think until you get above those levels, above that trend line, you can, for the most part, techs it just shows you that we're still in this split market.
That's right. With this trend line here, we've kind of lowered the bar for the Nasdaq, but it would have to take even more for, like you said, for it to get above the 50-day. And these highs from the relatively recent past. So we're going to keep tabs on that. And Ed, you mentioned the Russell 2000. So let's take a look at IWM, the ETF that tracks small caps here. So pretty strong gain, but we're still below that 50-day line. And it looks like we're getting some resistance there.
Yeah, so that's a real issue because, again, we had the S&P and the Dow and the small caps, they were all doing well. And there was just this one little outlier, the Nasdaq. And some of that was you could sort of write off as like, oh, there's some of those speculative names. Those names are down. But that's all that's really the problem. Everything else is working great. But with the small caps below the 50-day line, that just raises more concerns that, how much is really strong and how much is weak. Nice bounce today, but yeah, still below the 50-day line. The 21-day line may soon undercut the 50, which isn't great. So, if it can continue the momentum, then you can start feeling a little bit better about the small caps and the broader market, but it does need to get above those levels.
Okay, great. And just really quickly before we move on to individual stocks, we'll take a look at the S&P 500 and Dow, both closing down about 0.3% for the day. So holding near recent highs. What do you think about the S&P?
They look great. I mean, it's just this tiny little decline right at record highs. So nothing to be worried about. In fact, it was probably just some of the techs in these indexes that sort of dragged on it a little bit because the real economy names, and there's a lot of leading stocks actually did pretty well today. There's a lot of strength in those areas.
Well, speaking of strength, let's talk about some individual names. Kicking things off here with DXC Technology, gaining about 9% today, heavy volume, breaking out of consolidation here. What is looking interesting to you about DXC? Because this isn't a name that we've been talking about a whole bunch.
Well, and there's a reason for it. One, it has had 7 straight earnings declines year over year. So this is a problem preceding the pandemic. I mean, it's not. So there's a long downtrend. So this is a turnaround play, but fiscal 22, which actually starts very soon. I believe they're in Q4 2021 right now. It's expected to rebound. So there's finally going to be a bounce in a turnaround play. Definitely in that situation on a weekly chart. Yeah, nice RS line is at least a 52-week high. So you see that blue dot. When you get that blue dot, when a stock is in a base or breaking out, it's breaking out there. It's technically, while the pattern rack is showing the consolidation, the buy point is actually that handle. You can sort of see it. It isn't showing up because it's a consolidation, but the buy point is 29.65. I believe technically the buy point range ends at 31.13. So technically it's 2 cents above that. It could easily pull back. It's obviously had a little run here of 4 straight strong days. So that's something to keep in mind. I think in this environment, I mean, pullbacks are fairly normal anyway, but in this environment where you sort of have ups and downs, that if you did take a position, just know that there's a very good chance this could come back to the buy point or more. So, if you wanted to wait for that, you could do that.
Yes. And let's take a look at US Steel, ticker X. We've been tracking the formation of this handle on this base pretty closely. Ended up being kind of a deep handle at 24%, but it's had a nice streak of a couple of days of gains that were kicked off by an upside reversal at the 50-day line, and it's continuing to power higher here. And we've been talking about how strong this industry group is.
Yeah, and there's a lot to like. I mean, there was strong volume on the breakout, just like there was on DXC, relative strength line at a new high. But that handle is a concern. I mean, that's a concern, 24% deep. And just the fact that we've run up so fast now over the past 5 days or so, it must be like 30%. If you're thinking about there's a chance of a pullback, I mean, that would be not surprising at all in this situation. And, and you brought up the group, which is great. This is one reason to be in favor of it. The only issue is is this one of the laggards in the group? Is it, do you jump on board this? Now it could be that you've missed out because, as you're pointing out, to all those are doing much better. Do you wait for one of them to show a buying opportunity? Well, they're all sort of extended. So if you want to get on board this is one way to get on board.
Very true. And last but not least, AMD. It's been a little while since if I could type it in the right ticker, since we've checked in with AMD. I mean, back last summer had an incredible move, but it's really been lagging. Even before tech stocks got hit pretty hard, AMD was not really doing a whole lot of good before then, and it is still stuck in this downtrend, Ed.
Yeah, it sort of had this long stretch from like November to early January of trying to break out. Relative strength line was sort of topping out in that area. But yeah, so obviously in the last month or so plus, it's really fallen off. And, it's stuck below the 21-day, 50-day line. It's now below the 200-day line. You're just seeing this with a lot of the 2020 leaders. This one may come back, but you don't know if it will. And it might come back months from now. I mean, look at that relative strength line. I believe that's an 8-month low. And, whether it's high flyers, like some of the, the superstars like Neo, or solid winners like AMD or Apple, they're just down, and you don't, you just don't know when they're going to, not all of them are going to come back necessarily, and it may be a while. So, you just don't want to buy and hope is not a good strategy. You can't just say, well, it was a winner then, it's going to be a winner now. That's not how it works between, when the market is switching around like it is.
That's right. There's a reason why we use chart patterns and look at stocks that are in uptrends when we're buying, because we're really trying to put those odds in our favor. And this type of situation is not doing that. And we also have the 10-week and the 40-week lines about to converge here, Ed.
Yeah, I think that's called the devil's cross or whatever. It's not a positive sign. It's just been hitting resistance at these areas. You could have said, well, it's going to hit a bottom. It's hitting, it's finding support a couple of weeks ago at the 200-day line. Well, then it rolls over. Don't try to guess the bottom. You don't know where that bottom will be. Maybe today is the bottom and we're going to rally and everything's great, but there's no reason necessarily to believe that other than wanting to believe it. And so, yeah, wait for those chart patterns. You want to have the odds in your favor when you're buying a stock.
All right, Ed, thank you so much for sharing those insights today. Thank you, audience, for tuning in. We're going to continue the conversation tomorrow morning, of course, on IBD Live. And Ed, there's always so much to talk about and special guests to talk about these things with.
Yeah, I'm looking forward to those special guests. Could you tease them a little bit more?
Joe Fahmy of Zor Capital. He's going to be joining us on tomorrow's show. He's been on the podcast. Maybe you're following him on social media. He's very interesting and has a lot of great things to say, I'm sure. So we're all looking forward to hearing him tomorrow morning on IBD Live, Ed.
That's right.
All right. Thanks so much for tuning in. We'll see you right back here tomorrow.